Welcome to the end of day review for Thursday, the 11th of January 2024. Starting off with the economic calendar, what we can see is that there was significant red folder news for the USD, being CPI. CPI is a very high risk event and often causes large spikes in the market. Having said that, having trades open during this time is not wise at all, and I'd encourage you to close it at least half an hour before. If you are in any trades, and I wouldn't allow triggering of any entries during the London lull, as it's far too close to this news release, and it could be that price just ranges for a while until the actual news release, making it difficult to actually get out of the trade without a significant P&L impact. Having said all of that, I'll quickly jump into the chart, starting off with the 4-hour. Today was quite nice. As we came into the morning, we essentially reset that secondary leg range that we were in for a couple of days, essentially allowing us to catch to sort of try and catch any shorts based on a new secondary leg that had developed early during the London or Frankfurt session. In terms of daily direction bias, nothing much really changed. We still have confirmed bullish market structure. In terms of trading long, there isn't any support because everything is efficiently mitigated to the left, and thus to validate for its primary leg, we need a candle body break of this 4H last point of supply pullback phase to then say that the pullback phase is officially ended and that the pro trend narrative is at play. However, we didn't get the candle body break. Instead, CPI was quite positive for the USD, and because of this news, the markets pushed down quite nicely. We did get another wick to the upside, which isn't entirely unanticipated. This was probably taking all the relative equal high liquidity sitting here. So essentially what that meant is overall our bias was primarily to the short side for today, as I indicated in my London outlook. However, there was a possibility that we could actually trade longs if the 4H set up towards the end of the London session going into the New York session, but that didn't materialize. Then moving on to the 15-minute, I'll use my live charts to illustrate this, but I'll add in an EOD technical markup at the end of the video so that you can see how I went about marking up my end of days. But essentially what we can see right here is we had the 15-minute chalk, we had a POI to trade from, we did have this fib level to consider. However, because my trading plan rule is that I only go to the 5-minute if the secondary leg isn't visible on the 15-minute, and in this case the secondary leg is visible on both time frames, so I would have set my entry based on this POI, which to be honest wouldn't have been triggered. But I think the overarching theme here that is quite important is the fact that we're quite significantly above the previous high of the day. My trading plan rules are such that you can't short if you're above the previous day high, and you can't long if you're below the previous day low, unless you have red folder news to support trading shorts against this previous high of the day whilst you are above it. So perhaps to continue illustrating on that point, what we can see is New York created a new high of the day, but the entry or potential entry was above the previous high or low of the day. That didn't matter because we actually have red folder significant news to support why this trade makes sense. Having said that, that essentially means that there weren't any short trades for me during the London session, and then during the New York session I wasn't able to actually catch any short trades, even though we have all the confluences. The thing that sort of kept me out was the fact that we already had moved the daily range, which from my latest calculations is about 85 pips for GBPUSD, and I felt that trying to catch a further continuation is probably stretching it a little, especially given that we are on a Thursday. Had we been on a Tuesday or Wednesday, then we could possibly support taking the trade on the premise that we'll actually take out ERL. But yeah, that's that's not going to happen because we're trading counter trend as well. So yeah, so this trade that I marked up whilst valid isn't in my book high probability in terms of actually following through and reaching the target, although it might very well do so because of the positive US inflation rates, but there is a chance that it won't do it today. Um, but yeah, that's essentially the end of the outlook. I think tomorrow there's quite significant GBP news, GDP news. So it could swing things in the opposite direction. So that's something to consider. The other thing to keep in mind is the fact that we actually don't have available IRL. Well, if this is taken out, then we don't really have any IRL on the 15-minute, and if that's the case, then that's a cause for going to the 5-minute and trying to catch a trade from that sense. But that's for the London outlook tomorrow, and we'll chat again tomorrow.